Markets Now is brought to you by the 5-year anniversary of Brevant Seeds. Here's to 5 years of not just winning, but collecting one game-changing W after another. See all of our wins at Brevant.com/wins.
Welcome to Markets Now. I'm Michelle Rook with Rich Nelson of Allendale. We saw soybeans and cattle to the plus side, everything else lower on Tuesday. And Rich, let's start off talking about soybeans. We don't have a whole lot of news to push the market right now, but soybeans seem to be pinning their hopes either on a China deal or this trade aid package for farmers, it looks like.
They certainly do. And there's a lot of questions still lined up with both those stories here at this point in time. A lot of us will question exactly what type of deal may be met at the end of this month, or maybe we may not have a deal. So certainly we see what comes with that story here in these next few weeks. But for right now, at least, it does give us this discussion with soybean pricing a little artificial support in the short term.
Yeah, a lot of speculation about, if you get a trade deal, why would you need trade aid? So maybe you don't get both?
That's a good question. And it also has some people questioning whether it's going to be one or the other. So for right now, at least, it's a lot of questions, and we don't have a lot of answers yet on this issue. And on top of that, this also factors into some discussions regarding what we'll see for next spring's planting mix between corn and soybeans as well.
Yeah. Even if we got a China deal, Rich, how much do the Chinese already have booked in terms of their soybean needs? And when would we be able to backfill some of those purchases?
That's a really tough question for us right now. From a realistic basis, I believe last week the U.S. Ag Attaché to China suggested they actually have a good portion of their needs into December already met. So if we do have a deal, we'll get a part of December perhaps, we'll get January and maybe a little bit February as well before that Brazilian new crop harvest really becomes a bigger factor as well. So there is going to be maybe a partial fill, but certainly not bringing us back to what we hoped for at the start of this year.
So with that in mind, is USDA's 1.7 billion bushel export projection too high at this point for soybeans?
So that's a relatively tough story for us right now, especially considering the fact that China is about 60% of our general export story. Now, we do have, of course, non-China buyers, which are about 40% of the world soybean market. So we can fill part of that needs. But even when you do the math, as far as assuming we'll make some sales to China and maybe we'll do a good portion of the everybody else type of story, this still leaves a deficit of maybe 3 to 7 million tons. That's the equivalent of 50 to 250 million bushels. So there are still some questions about total exports when it's all said and done.
When we had the government shutdown in 2018, Rich, China came in and quietly bought soybeans under the radar. Is it at all possible they are or will do that this time around?
I personally would not suggest it. I think right now, at least with the current tariff structure that they're facing regarding extra cost, it still does pay them to pay more attention to Brazil, at least in the very short term. So I don't think we'll probably see China do some sneaky buys in this case, at least. I do think we'll have to require some type of agreed to deal, at least in these next few weeks here.
Now, Rich, we were supposed to get a trade aid package announced today. I know the day isn't over with yet, but now there's discussion that with the government shut down, maybe this is going to be delayed until the government's back open. What are you hearing?
Good question here. So as far as our discussion here from Treasury Secretary Bessent on Friday, he did mention he did say Tuesday specifically, but like you mentioned, now there's some questions on when it'll be maybe later on this week or perhaps pushed back, like you mentioned, a few weeks perhaps. So at this point, we have more questions and answers on this very key issue that a lot of producers are looking forward to hearing about.
Yeah. In the meantime, soybeans are pretty darn sideways, aren't they? We have a lot of key moving averages as overhead resistance to cap these rallies, don't we?
Okay, sir, that's exactly right here. And keep in mind, this market already has a portion of the export risk story already factored into current prices. And as long as we're still waiting for a few weeks from this potential trade deal with China, this market can trade maybe a little higher than quote unquote theoretic value in the very short term. So yes, this market's kind of a sideways trade, at least these past few days here.
A little pullback in the corn market on Tuesday. Did we run up into some chart resistance there again, or was that just some harvest pressure?
I do think this is a harvest pressure issue, and also we have our discussions from much of the trade right now running as far as a yield story. And right now, the yield decline story into October, at least, is not really one which changes things too much. In addition, the corn side has those problems from last week's grain stocks report, which added 207 million bushels to the starting mix for the beginning stock story for this year. So corn does have a small extra headwind in the very short term.
And of course, with the government shut down, we're not getting really any export data or any other data like the WASDE report. Yet we did have some average trade guesses out here today, didn't we?
That sure is right. Keep in mind here as far as the general mix right now, the trade suggesting new crop stocks moving from 2.1 billion bushels to now maybe to 2.2. I will point out a little positive news with that story. That of course does come from a beginning stock increase from last week's grain stocks report. But one positive news is the average trade guess is not suggesting that the feed residual side is really going to get hit too much in the short term. So not many people pushing those numbers up to 2.4 billion at least.
So how long do we go, Rich, before we have no October WASDE and we just start focusing on November?
That's probably going to be the case right now. It's almost too late here in case we had a magic deal for a shutdown fixed this week. It's going to be too late to get this report out. So at this point in time, we probably are more or less going to be waiting right now or putting in our mindset. It's not going to be till November that we see the next USDA report as it stands right now.
Yeah, and I don't know, is that good or bad? Because USDA is usually pretty slow to come down on yield, yet we know some of these yield reports off the combine are showing some pretty big corn yield losses, aren't we?
That sure is right. And also keep in mind here, historically, the October report does not see really significant yield declines. Usually these are limited to 0.2 to 0.8% from the September numbers. And the average trade guess coming out here for this week's discussion does reflect that. Yields only dropping to 185 bushels an acre. So realistically, it won't be till November into that January timeframe that we see yields reflecting what a lot of producers are seeing right now.
And then what happens when we reopen the government? We get this big USDA data dump.
That sure is right. So we'll have a few weeks lined up regarding export sales, which are maybe packaged as one big number, and we kind of figured out as far as the break into parcel and a few weeks of action. On top of that, we'll get our delayed reports. Delayed August corn for ethanol, delayed soybean crush rates. So we will have a lot of things kind of factored in, assuming this shutdown does last for a few more weeks.
And the wheat market, another down day. I guess I feel like a broken record when I say that, but is the pressure, did it come today from the higher dollar, or is this just still this global supply glut that we can't get through?
I think in the very short term, this U.S. market specifically, not too much on the world side, but the U.S. market does have a reckoning right now. Trade expectations for what would have been a WASI report on Thursday do suggest an increase, of course, in the U.S. stocks. We had new contract lows for Minneapolis, lowest close for all three contracts here today. You can also point out that there is a feed relationship with corn. So if corn destabilizes and drops a little bit, this does add a little theoretic pressure to wheat side as well. So this side is a very tough story, and I don't have a good solid answer in the very short term for it.
How is this buying any acres here? I mean, are we going to lose some acres of winter wheat, do you think, because of these significantly lower prices?
So there is talk about that right now, and the question is exactly how much. Are we going to lose maybe 1 million acres, maybe 1.5 million? So we have this hope or expectation. Of course, a little concerning right now is we actually won't get a planting report detailing these numbers until January. So for right now, we are hoping and expecting some type of acreage decline. The question is going to be how much right now in the very short term. Also, the size of it will be a very serious issue for us as well.
Nice update in the cattle market. Let's talk about there's several bullish factors that came together to drive that, right?
A lot of things lined up. We had, of course, a new screwworm finding, so this keeps another maybe a little more delayed border reopening, maybe until the end of the year at the very earliest. Keep in mind, Mexico supplies us with about 3.7% of U.S. cattle slaughter in normal years. Also, the president's discussion with the Brazilian president yesterday, it did not result in any clear tariff drops. So that keeps that 2% of beef that Brazil supplies us with kind of more restricted as well. There were no deliveries against that October contract for first notice day. So a few things lined up, and the cattle market had a great day, especially on the feeder side here overall.
Yeah, and then boxes were higher. So do you think that these markets, I mean, feeders are within striking distance again of the record highs. Do you think we're going to go back and test those?
I do think we'll have a chance at touching them. And the question is exactly how much. And a lot of us will point out that this is still a very, very inflated market. And quite important to also point out, we have had a good drop in wholesale beef over, 3, 4 prior weeks, but we haven't seen cash cattle take as much of a percentage hit. So quite important to note, despite our clear concerns regarding employment, which are a valid concern right now, this market has been quite resilient for the face of what has been a really troubled news flow overall.
For sure. Do you think the Fed cash market can stabilize this week or not?
I do think for this week it will stabilize. And keep in mind, futures have suggested that we probably will be dropping in terms of cash markets, maybe into that October timeframe, maybe stabilize into early November. But keep in mind, we do have a retightening of supplies really starting up in that later November timeframe. So realistically, despite our concerns regarding the employment situation, you do have a counterpole to that argument here with renewed supply concerns really going into that November, December, and first half of next year timeframe.
Meanwhile, hogs have had a pretty good correction off of the contract highs. It looks like we've done some technical damage. So is this all technical buying, or is there some fundamental push there too?
I do think that there's a fundamental issue here. And keep in mind, we last week we probably stopped our procurement for October, which is National Pork Month. That's been wrapped up. Also, we saw hog slaughter in the past 3 weeks. It's returned to near last year levels. The prior 3 months before that, we were running about 2% below last year. So I do think, the ending of pork month buying, also a return to near normal slaughter levels. I think those are issues here for us. Keep in mind, this is going to be only a short-term bearish issue in the grand scheme of things. We'll probably have a renewed tightened discussion regarding supplies going in that December through May timeframe in these months ahead here.
But the funds were record long. So now that we've done this technical damage, how much of a correction could we see if they keep liquidating?
No, I think right now, at least we can probably see that December contract drop perhaps down to about $84, maybe at the very low end of things, before we find some stability. And another counter argument here is overall, pork demand has been relatively okay here these past few weeks. And I think a lot of us are also pointing out that the supply story in the month ahead or in the months ahead is still a very important issue to point out with that recent hogs and pigs report. So $84 is my number on the low end here for December.
All right. Thanks so much. Rich Nelson with Allendale. That is Markets Now.
You were right.
You were right.
You were right.
Well, you were right. When you choose your seed brand, there's winning, and then there's...
You were right. Should have gone with Brevant seeds.
When you choose Brevant seeds, you don't just win. You get to be right. Don't just win. Win. Talk with your retailer or visit Brevant.com/win to get started.